All right, let's jump right in. We're not going to talk about some secret magic entry signal today. Nope, we're talking about something way more important. How to build an absolute fortress around your trading account. Honestly, this is the one skill that decides if you're in this game for the long haul, or if you're just a tourist.
And that right there, that's the whole mindset shift. Look, the best traders on the planet take losses, all the time. But the thing that makes them pros is that their losses are tiny, they're controlled, and they never ever threaten their ability to show up and trade the next day. This whole explainer is about how you can do that too.
So why is this such a big deal? Why are professionals so obsessed with it? Well, it all comes down to some cold, hard math. Math that, unfortunately, a lot of new traders choose to ignore right before they blow up.
I really need you to stop thinking of your account as just a pile of money. It's not. It is the single most important tool of your business. It's your inventory, it's your raw material, it's the whole shebang. If it's gone, you are out of business. Simple as that. Protecting it isn't just a strategy, it's job number one.
Okay, so let me ask you a quick question. Just gut reaction. You lose 50% of your account. What percentage gain do you need to get back to where you started? Most people's brains immediately say, well, 50%, of course. It just feels right. But the reality? Well, the reality is a lot scarier.
And here's that scary truth. To get back from a 50% loss, you don't need a 50% gain. You need a 100% gain. You have to literally double what you have left just to break even. And look how insane it gets from there. A 75% loss needs a 300% gain. A 90% loss? You need a mind-blowing 900% return. It's not a straight line, folks. It's an exponential nightmare. And this, right here, is why you simply cannot afford a big, catastrophic loss. Your number one job as a trader isn't even to make money. I'm serious. Your job is to stay in the game. The profits? That's just what happens when you stay in the game long enough for your edge to play out.
Okay, so we get the problem. It's serious. But the good news, and there is good news, is that the solution is actually pretty straightforward. It's elegant, it's powerful, and it's all built on 3 simple pillars.
These are your non-negotiables. Think of them as the 3 legs of the stool that will support your entire trading career. The 1% rule, a solid risk-to-reward ratio, and precision position sizing. Together, these things create an iron wall around your capital. Let's break them down.
This is it, the golden rule, the bedrock of all professional risk management. If you have a $10,000 account, it means the absolute most you can lose on any one trade is $100. Period. No what-ifs. No, but this time it's different. 1%. That's the law.
Now think about the psychological power this gives you. You could be wrong 10 times in a row. I mean, a truly awful losing streak by anyone's standards. And you'd only be down 10% of your capital. You are so far from being knocked out of the game, you're just getting warmed up for your next winner.
Okay, pillar number 2. This is about making sure that when you win big enough to pay for the small losses. It's about tilting the math in your favor over the long run. We're only taking trades where the potential upside is way bigger than the potential downside.
Just look at the difference here. It's night and day. If you're trading 1-to-1, you have to be right more than half the time just to make a profit. That's a ton of pressure. But look at a professional standard like 1-to-3. You can be flat out wrong 75% of the time and still not lose money. That gives you the freedom to be wrong, which, ironically, is what helps you trade right.
And finally, this is the pillar that acts like the glue holding it all together. This is the practical, mechanical step that makes sure you actually follow the first 2 rules. It answers the simple question, okay, based on where my stop loss is, exactly how many shares or lots can I trade to make sure my loss is capped at 1%? All right, theory is great, but it's totally useless if you don't put it into practice. So let's get our hands dirty and build out a real, actionable plan that you can start using today.
Look, the pros don't do this stuff in their head. They use tools to enforce their own rules and take emotion completely out of the process. Things like automated position size calculators, using indicators like the average true range or ATR to set smarter stops, and keeping a detailed journal. These aren't nice-to-haves, they are required tools of the trade. And please, don't try to do all this at once. It's a crawl, walk, run approach. For the first 3 months, your only goal is perfect execution of the 1% rule. Don't even look at your profit and loss. Just nail the process. Once that's second nature, then you can start layering in risk to reward, and later, automation and more advanced stuff.
Okay, now, it's time for a really important reality check.
Because even the strongest fortress has potential weaknesses, and as a professional, you absolutely have to know where they are.
You've probably seen this during a big news event. The market just jumps. It gaps right past your stop-loss order without ever triggering it. All of a sudden, your carefully planned 1% risk turns into a 2% or 3% loss. This is a real risk, and it's why a lot of pros just sit on their hands during major news releases.
This is such a classic trap. It's so easy to build a system that looks absolutely perfect on a historical chart. But here's the thing. Markets evolve. They change. What worked like a charm for the last 5 years might completely fall apart tomorrow. Your system has to be robust and adaptable, not perfectly curve-fit to the past.
And here we are, the biggest risk of them all, the single greatest threat to your trading capital. And spoiler alert, it's you. A system is only as good as the trader's discipline to follow it. That little voice that says, just move the stop a little bit, or let's double down on this loser, that voice is the #1 account killer in the world.
And that quote really says it all, doesn't it? The rules, the math, the calculators, they're all just tools designed to protect you from your own worst impulses. In the end, your discipline is the final and most important shield you have.
So I want you to walk away from this with a totally new perspective. Risk management isn't a bunch of boring, restrictive rules that hold you back. It's the exact opposite. It's the strong foundation that guarantees that one bad trade, or even a bad week, is just a bump in the road, not a career-ending catastrophe. It is the very thing that gives you the freedom to trade with true professional confidence.
And that's really the question I want to leave you with. It's not about finding the perfect entry. It's about building a system that is so solid, so mechanical, and so deeply ingrained in your process that it protects your capital even when you're having your worst day. Because that is the real secret to lasting in this game.